We have here the practice problem answers for Chapter 18. I'm going to remind you that I gave you a whole lot of information, things that I wanted you to check. So for the Celine Davis file, I gave you the answer. I told you what the refund was. Get that little box over here. I gave you a refund amount. I wanted to make sure that you did designate a principal residence for her because she has a principal residence exemption if you ask for it. And I wanted to confirm the amounts on there. I wanted you to take a look at whether or not she was getting GST. Climate action incentive will depend on if you were in Winnipeg or out of Winnipeg. Quality at source we're going to talk about briefly. There should be one check mark. We're going to talk about where that goes. She doesn't need notes because her refund is under $500. And then I had a question for you. Can you explain to Celine why she must file a tax return this year, even though her refund and GST benefits are small? So I want to start there, okay? And if you need a refresher for Celine, what do we know about Celine? I can show you based on her tax return as much as I can show you based on the case. I'm going to pull up my Celine file. We're going to take a look at her tax return, and I'm going to remind you on her tax return that she has a very small refund. Let's take a look at her income here. Pretty typical sources of income. She had employment income, and that was it. Nothing really exciting on the return, but she sold property. Good. So we have a Schedule 3. If we have a Schedule 3, she must file a tax return. So when she says, oh, it's only a little bit of money, I don't know if I want to pay to file a return this year, what advice are you going to give her? I would say two things for this client. First is, if you don't get that principal residence exemption, there could be a penalty for that. We want to make sure she gets that principal residence exemption, right? How much did she sell the house for? $205,700. If that was at a profit, want to make sure that she gets that exemption. If she files a late election, there's a penalty. Could be as much as $8,000 per year that she's late filing that. So that's something she wants to think about. So really, she doesn't have a choice. Now, how do we make her feel better about it? She's getting a $3 refund and like $24 of GST, but what else is she going to get when she files that's going to make her feel a little bit better? Climate action incentive. So yes, you're not getting a huge benefit, except we're protecting the future. If you get audited for that sale of principal residence, we're protecting that. But in addition to that, because you're in Manitoba, you will get another $416. So let's file the return for you. This is the benefit that you're going to get for it. So she wants to do it, and she has to do it. The has to do it is important, but the wanting to do it is going to help. Good. Quick refresher on the T2191. I want to remind everyone that what I was looking for in this case was year of acquisition 2011, proceeds of disposition 205,700, and I wanted you to have 10 years, not 11 years. Why did I want 10 years designated principal residence and not 11 years? She owned it from 2011 until 2021. Why are we only doing 10 years? To save the 2021 for the next home. Perfect. We want to use that +1 rule to our advantage. We know what's happening now. We don't know what's going to happen in the future. So best practices, we're going to do it that way. Okay, very good. Were there any other questions about this one? Anything you need me to look at before I go on? Someone who didn't get a number right or wants to double check something? If you have a question, give me a green check mark. That way I'll give you time to type it. If you got everything right, then we're just going to keep going. All right, let's go on to the next one. So what did we have the next one? We had Betty. Betty had a refund. Oh, I am supposed to show you one more thing. This is why I check things. Quality at source. So we did not need any notes. Don't need to explain a $3 refund. The $3 refund is precisely what we want. We want a refund that's pretty much zero. Her employer did their calculations well. But for your data entry, I do expect to see a check mark on your tax slip for Celine. Celine had a tax slip which was a T4, only one. She didn't need any check marks to clear her warnings, so I expect it to be on the first box with numbers in it. In this case, that'll be box 14. All right, good. That's that one done. Let's go on to the next one. Betty White, we had a small refund. We still don't need to explain that refund. I don't think it's a bad thing to be able to explain your refunds, but we're not going to require you to do notes until we hit that $500 mark. Okay, we're going to double check that you had some income on line 10400. We're going to check what you had for line 21200. We're going to check to see what happened for line 45700 and climate action incentive. In this one, I wanted one check mark is required. The carry forward note is optional. You can decide what to do with it. So let's see if we can find Betty's return. We have Betty Robinson. I didn't put her last name on, but you know which Betty I mean. Going to remind you for my quality at source check marks. In this case, she had one tax slip. I want one check mark. At the top of the slip, in this case, it'll be box 14 that we're going to put it in. Okay. Quick refresher, I can do most of this from here. Other employment income was her GST rebate from the previous year. We had some deductions. We had RPP. We had union dues. That one, make sure you had the union dues in. Everything else was pretty straightforward until we get to this $8 GST rebate. How did we get that rebate? She had, in this case, professional fees. If it had been union dues, there would not be a GST rebate because she would not have paid GST on them. You'll know that because you'll look at the receipt. The receipt will have GST on it or it won't have GST on it. So in the receipt, we will do professional dues. Why is Betty eligible for professional dues? In this case, we've put them on the return. Are we correct in doing so? What's her occupation? She's a nurse. And remember, nurses are required by law to be a member of the College of Nurses. They cannot practice their work at all anywhere in Manitoba if they are not a member of that organization because the law says they have to be. So nurses, we expect to see professional dues for. In her case, she's done it. You're going to notice the computer has generated a GST 370. It's a form you're not going to be comfortable with. I would at this point be going and finding an associate who's done the GST course, knows a little bit more about this, and they can make sure that you're doing it correctly. If you have a form the computer's generating, you don't understand it, it's always good to make sure you do, because remember, we're not sending data entry to the CRA, we're sending a tax return to the CRA. We're sending tax forms and tax line numbers. So this case, she's going to be doing this. You're going to notice $8.34 is a refundable credit. She's going to get it now. Now being 2022 is when she's going to get it. So on her 2022 return, we want to make sure we know that she has an $8.34 amount coming back. I'm going to show you on my notes and diagnostics. The computer right now is going to automatically put that, and in a carry forward next year, if the computer program doesn't change, it will show up there as well. The reason I might still do a carry forward note, and this is optional, but I would do it, is that sometimes we get a lot of warnings on our notes and diagnostics, and we tend to scroll through the ones at the bottom without reading them very carefully. We shouldn't do that, but we get busy. If you have a note, it's at the top. And the notes is the first thing I check, and it has everything I want on there. So to make my life easier, if this was my client, I would still put a note that would say something like GST rebate for 2021, received in 2022, $8.34, make sure to put it on the 2022 return. That way, when I'm doing lots of returns very quickly, maybe she's going to come in on the last week of April, and I have to get through a lot of files very quickly. I don't have to dig through pages and pages of warnings. It's going to be the first thing I see. So that's optional. That's what I do. You're going to find a system that works for you. If the carry forward note isn't automatic, that's one I would require you to do, however, because you're not going to remember it next year. All right. So that is Betty. Are there any other questions about Betty? Same thing, give me a green check mark if you think you might have a question and need time to type it. Okay, I'm going to go on then to the last one, and the last one had a number of notes here. So just a refresher for what you were expecting to see on the return. Nice big refund. Nice big refund means I need notes in this case. I'm going to remind you about a couple of lines. So I know that he had some income on line 11900. I know that he had moving expenses. I want you to double check that page 1 is complete. We're going to look at page 1 together. Okay. I want you to make sure you had the correct net income for him. So if you're not sure where that number came from, today is a good day to ask that. He did sell a home, so I want the principal residence designation done. Proceeds, I want to make sure he's protected his +1. If he's bought a new home, we need to deal with that as well. He's going to have an amount on line 44800. I want to make sure that that's there. He's got Canada Workers Benefit, which means you should be doing a Canada Workers Benefit checklist to make sure the computer is correct. Remember, there have been years in the past where the computer has generated things that are not accurate, and you had to know that. So if you see Canada Workers Benefit, make sure you've decided for yourself that he's eligible and not just said the computer said so. And then I'm going to have a little bit of a refundable credit there. We're going to look at the direct deposit form, climate action incentive GST. You need 3 check marks and 5 notes in this case. But the first thing I want to get to today is ask you, you would have had to do a bit of research for this unless you've lived in Ontario before. If he moved from Ontario in February and did not notify the CRA, so February 2021, he left Ontario, came to Manitoba. Now it's 2022, and he is filing his return now, and the government is going to find out that he's moved. What will happen when he files if he didn't tell the government that he moved? Does anyone know? This would only be relevant if he had moved from Ontario. All right, this is why I gave you time to do the homework. How do we find out this information? What resources might you have had? Well, if it's an Ontario-specific thing, I'd be looking in my Ontario-specific book. This is important because something is going to happen to this client and you need to warn him that it's going to happen. So we do not expect you to know everything in this course, but I do expect you to look things up. So how do I look it up? I'm going to go find my provincial for Ontario, provincial tax supplement. I'm going to go in here and I'm going to go, there must be something that I need to know about if he's moved and my teacher is asking me about it. I'm especially pointing this out because we're in Manitoba. People move here from Ontario all the time. They are right next door to us. There are a few things you're going to need to know about Ontario, even if you're not regularly doing returns from Ontario. Although I will say, we also get returns from right across the border because we might be their closest office. All right, so a couple of things you want to know, and I'm going to go down here and see if I can find it for you. That is going to be the Ontario Trillium benefit. Has anyone heard of the Ontario Trillium benefit? Okay, it works something like our rent credit, except our rent credit we get on our tax return now. So when we get a rent credit here, we get our education and property tax credit is the formal name for it. It's based on the previous year, and we get it now. The Trillium benefit is for people who are owners or renters, and it gets paid out for next year. So that's a problem, because he will have filled this out in previous years. He will have been eligible for the Trillium benefit in previous years. He will have been receiving the Ontario Trillium benefit. But once he moves out of Ontario, he is no longer entitled to it. So what would happen? He would keep getting it for periods of time, and then what's going to happen when we file his return and they find out that he moved? It's paid out monthly. He's going to have to pay it back. So we're going to have to warn him that he's going to have to pay it back. So like I said, you don't need to know everything about Ontario, but a few things are useful to know about our neighbors. Ontario has a Trillium benefit. If people move from Ontario, double check. What I would do if you have a client who's moved from a different province to here is take a look on their REPA client and see what benefits they've been receiving, because that's the way that you're going to notice this. If you're being careful, you're noticing he's been getting a Trillium benefit and you don't know what a Trillium benefit is, then you're going to know what research to do. You're going to go looking for it, okay? So that's the first thing that I wanted you to know about getting into this scenario is he's moved from Ontario. He's going to have to repay any Trillium benefit that he has received since he moved, which if he moved in February is a lot of it. So he's going to get that nice big refund, but tell him not to spend all of it. Some of it he's going to need to save to pay back to the Trillium benefit program. You don't want to have him have a big unnecessary debt that's just going to sit there and cause problems for him next year. So that's the first thing that I wanted you to look into. Okay. The next question I had for you is if he had medical expenses, would there have been a benefit of claiming them this year? Okay. So for this one, we're going to go into his return. And I'm going to go into his place here. We're going to know that he had not a whole lot of income, 16,000 taxable income, 13,000 credits here, more credits here. We're already at $17,000 worth of credits for $16,000 worth of income. So your first instinct is to say he doesn't need medical expenses. What should we consider? If he did have medical expenses, why might that be beneficial to him? Not going to increase his refund based on credits because he doesn't need any more credits. But what could they do? So not pharmacare. Pharmacare is what he's entitled to because he's low income, although yes, he might for that. And Kendra, save for next year maybe, but before we save it for next year, I want you to think about one more line on the tax return. And it's down here. And my cursor is on it. When you have a low-income taxpayer who had some earned income and medical expenses, what do we have to remember they might be entitled to? This is one of those things where if you don't tell the computer about it because you haven't asked the client to go get his medical receipts, you might be missing out on some refund. We have a refundable medical expense supplement. And I'm going to tell you, everyone forgets this. Believe me, our clients don't know about it, but we forget it if we're not thinking about it. So as soon as you see someone with low income, but they had working income, you're going to look and go, oh, I don't need medical expenses this year. In the back of your mind, go, wait a minute. How much did he have? So I want to show you, I haven't taught you how to do medical expenses. We're going to learn that today, but I want to show you what could have happened if I put medical expenses in. So I'm going to go in and I'm going to add some in for him. And I'll be teaching you how to do this later. Let's say premiums. What if the only thing he had was premiums? What if he had $700 of premiums? So he paid for Blue Cross $700. Now if I go to the tax return, the first place that I'm going to go to is make sure it's showing up here. $700 reduced by 3% of his net income still leaves $208.02. So I'm claiming $208.02. That's enough to put me onto the worksheet. And on the worksheet, if I can find it, because my computer is thinking about moving me to the worksheet. There we go. It's going to put in his income adjusted. He's entitled to 25% of everything he put on there. 25% is quite a bit if he had enough. You might have to play with a little bit. So you might not know before you send him out. You go, okay, did you have any medical expenses? Did you pay any health insurance premiums? What happened this year? He's going to go, oh, I had a couple prescriptions. If it's like 20 or 30 bucks, it's not going to make it onto the return. But if we can get it over that number, based on 3% of his net income, if we can get him over that number, and that's a low income, so we don't need a lot, we might be able to get him 25% of everything on top of that. So it's something you have to think about, and I wanted you to think about it. Okay? Didn't expect you to get the right answer, but I wanted you to think about it. So I'm going to take that out because it is not correct, but that's something that you could have done if you know your tax return really well. All right, and then the last thing, I'm going to pull this up for you here, just so that you can see what we had was principal residence designation, proceeds, moving expenses. Actually, I think what I'm going to do to make life easy is I'm going to give you a summary page. I'm going to show you his tax return here in one sort of setting. You can see everything relevant to his return. And I'm going to ask you a little question. We're going to do a quick poll here if I can remember where I put my polls. Okay. What should Rain expect for his tax refund next year? So is he going to have a much larger refund, a much smaller refund? Is he going to have basically the same refund, or is he going to owe? I'm going to do a quick little poll here. Hopefully you've thought about this. Let's see what we think. So you can see what he claimed this year. What are we going to warn him about for next year? Okay, I've got about half of you have answered. Waiting for just a few more. Give you another 10 seconds. All right, let's see how we did. Congratulations. Everybody said he's going to have a much smaller refund next year. Good. If you know that's going to happen, make sure you tell your client that's going to happen. You are all correct. Why will he have a much smaller refund? Well, probably won't have the EI. That's good. But he's definitely not going to have the moving expenses. An $18,000 deduction is huge. He will have union dues. That's going to help a little bit if he still has the union. But everything else on here that's making his refund big, he's going to lose. When he doesn't have that deduction, he's going to lose his Canada Workers Benefit. Probably not going to have the CPP overpayment. His provincial credits are going to be gone next year. His income will be too high to get them next year. So a big, big chunk of what he's getting this year, either from deductions or from the fact that he had deductions and therefore had low income is not going to be the situation for next year. So mostly what I would say is congratulations, you get a really, really good refund. You're not going to see this next year. Next year, expect your refund to be, if you're lucky, a couple $100. Congratulations. Do what you like for this year, but I want you to know this is a one-time thing. And then I would put notes in the file. For myself, I would put notes in the file saying, taxpayer understands the reasons why his refund was so high this year and that it's not likely to happen next year. That way, next year when he comes in and he says he has a new associate, he's gone to someone else, he goes in and he sits down and he goes, oh, well, I got $6,000 last year, so you must have done my return wrong this year. We've had clients who say that. I always get $6,000 as a refund. Then you go back and you look at his file and you go, yeah, no, they definitely explained to you last year that this was a one-time thing. And the reason you got it last year was because you had this big moving expenses deduction. You had all these costs. You didn't have them this year. That's why you're not getting a refund this year. And he will remember that conversation if you've reminded him about it. But it's a nice place to have notes. And it's important to let him know because you don't want him coming back next year having already spent $6,000 that he didn't have, that he's not going to get. All right, we're going to stop there. We're going to take a short break. So I'm going to give you a break until 10:02. What I am going to ask you to do, if you haven't already done it, is I want you to start in on the in-class assignment for Barry Hockley. So not the whole thing, just Barry Hockley, personal information, and the T4, because we're going to do a lot of data entry today. Anything I can get you to do up front, I want you to do now. So we're going to take a short break. I'm going to give you a bit more time because I've been talking till 10:03. Work ahead on that, get ready to go, and we're going to come back after the break and jump into the next chapter. Welcome back from break. Let me know if you're back. Give me a green check mark. If you haven't finished Barry Hockley yet, don't worry. We're going to come back. We'll have more time in the next break to finish it up. I just wanted to give you all as much time as you need to get there. Okay, got a few people back. Hopefully everybody else will keep following in when they hear me talking. We're going to talk today about families. So we have been doing up until now data entry for single people or divorced people or widowed people. Just like in the tax course, we did the theory for single people first. But as you know, there are lots and lots of people who have dependents, whether they are spouses where you have choices to make between spouses, who's going to claim what, or you don't have choices, but you have things that are connected, like childcare. Maybe you have dependent children. Maybe you have dependent adults in your life. So in that circumstance, we have much more complex returns on paper, and therefore we have more complicated data entry. Whenever it is possible, we should file returns for families as a unit, file them together in our computer. So of course, everyone gets their own individual tax return, but in the computer, we want to make sure that people are connected. We can't transfer things easily between files without connecting the files in our computer. In fact, some transfers we can only do if we have joined files. Some things cannot be done by the computer without having joined files. So whenever possible, you want to file returns for people together. It is important, however, to remember that clients are in control of their own personal information. So if they do not want their personal information to be in our computer system, then we can't put it in our computer system. We have to tell our clients in that circumstance that there may be some transfers or credits that they are going to lose out on because we can't do it if we don't have their files together. So I do not want anyone creating files for people without actually getting their permission to collect their personal information and have it. It doesn't mean we necessarily have to file their return. We can create the file, have the data in our computers, and they can file elsewhere if they want to. But if we're going to put them in our computer, we do need their permission to do that because we're going to be collecting their personal information. Okay? That being said, most clients are happy to share their information because they know they're going to get more. And again, most clients, if they're in a relationship together, will want their returns filed by one person. They want to get their taxes done in one fell swoop. Go to one appointment, get your taxes done for the whole family, and then leave. So most of the time, this is not an issue. It is important to make the decision for how many returns you're going to create before you start the returns. So you need to know about the family in front of you before you even start putting things in the computer. And that's because in the actual program, so we're using a student version of the program, but in the actual program, you cannot delete files. It is impossible to delete a file. You can take a file that has an error and make it inactive, and I'll be teaching you how to do that later, but it's still going to be in our computer system. So if you create files that you didn't want to create, or you create them in a way you didn't mean to create them, it's very difficult to fix. So I am going to show you how to do this. I'm going to stress how slowly I want you to go every time you do this, because in this computer program, if you do it wrong, you can delete it and fix it and do it the right way. But in an actual office setting, there is no way to delete it. You have now created duplicate files for your client that can come back to haunt senior associates later. I've had situations where a client has come in and it's one couple. It is a married couple with no kids, and I'll open up their file in my computer, and instead of downloading one file with all the information in it, it downloads 15 because someone created one and created another one and tried to delete it and made another copy. And now I have to sort through all of that and find where their actual information is and figure it out from there. So in real life, before you create a family, make the decisions you're going to make. Decide who is a dependent, how you want to connect them, because we have to do it in advance. So we're going to start today with Adam and Eve. You do want to pick a family head, so we want one person to be the person who gets all of the defaults in our computer. So the family head has nothing to do with the clients. Don't ask them who they want the head of the family to be. You want to decide who will benefit from the most transfers and credits. It's usually the person with the higher income. So if I have two clients, I'll look to see if I'm setting up a new file for them, who has the highest income this year. That's the person I'm going to name as the family head. So in this case, we have Adam, we have his personal information, we have Eve, and if I look at their T4s, I can see that Adam has the most income, Eve has a smaller amount of income. I'm going to choose Adam to be my family head. Okay, let's start that out then. And what I will do, as I always do, is I'm going to do a split screen here. So I have some of my data on one side of my screen and my DT Max, on the other side of my screen. That's what I wanted to do. I'm going to create a new family. Use the Smart Start Input Assistant. Okay. Starting a new family, you know how to do this already. We're going to say continue. I'm going to put Baines, and I'm going to put Adam. You can do the same as I do this. You should be doing it on yours. SIN number. Be careful when you're dealing with families that you don't mix up whose SIN number belongs to whose. I put in his birth date. Marital status will be married in this case. I'm going to put him in Winnipeg for me. I'm going to put a phone number in for him so that I can contact him if I want to. I'm going to put in an email for him. And as always, I'm going to ask at this point if he wants to sign up for online mail. He does not want to sign up for online mail, which is fine. He doesn't have to if he doesn't want to. I'm going to put in a mailing address, 23 Maple Lane in my city, R3A3G3 for me. Okay. And I should, at this point, have a warning. I don't, but I should have one. Let's find out why I don't have a warning. I have turned my warning off. At this point, you should have a warning that says you said that he's married, but you haven't connected him to anyone. Does anyone else have that warning on their computer? Is it showing up as a problem? Okay, I'm going to enter the T4 and see if that makes a difference for me. And this may just be because we've turned a few of the default warnings off to make our lives easier in other scenarios. So I will say you can go ahead and put in his dependable printers limited T4 information, 49480, Manitoba, 250591, 78178. Don't have a box 20 or 2022. Manitoba, I have 8917. I think that's going to be it for him. Ah, now I have my warning. So there's the warning I was expecting to see. All right, I'm going to do my quality at source now because I'm going to set a good example for you. I have dependable printers, limited. I've double checked. He's got an income that matches. He's got a CPP that is what I said. The EI is what I said. I have not entered a box 2426 because I don't need to. They match box 14. And my box 22, I have the Manitoba figure. I'm going to put a check mark on it. But I now have a warning. The computer is saying, we're generating a spousal amount for him, but you haven't said anything about a spouse. You need to have a spouse. Please give me a spouse. Okay. When you get that far, I would like to give me a green check mark. Let me know that you have entered in his information and you have the same warning that I have. If you have different warnings, let me know what your other warnings are, but you should have a warning that says married but has no spouse. So in the office computers on the full series of the program, you would get that warning right away until you've set up spouse. But for our computer, it's only going to do it when it starts to generate credits. Okay, I'll give everyone a few minutes to get to the same place that I'm at. If you get there, give me a green check mark. If you run into a problem, give me a red X or let me know in the chat window. So Lee, double check that you have the marital status as married and make sure you've entered the T4, and that should create the warning for you. So if you have your T4 in, you should have a warning. All right, we've got one person who's gotten that far. I'm going to give you all another minute or so. Keep working on it. And while you're doing that, do your quality at source. If you are finished, make sure you're double checking that you've spelled everything correctly, that the SIN number's there perfectly. You've got it as well. All right, I'm going to give you all another minute to do this, but while you're doing it, I'm going to start talking on top of what you're doing. So keep one ear open, but keep doing your data entry. So we have two options for entering a spouse. If we are not going to be doing a return for the spouse and there are no transfers that need to happen between the spouses. So if everything is straightforward, if it's just spousal credit that we need, no transfers, we're not dealing with medical expenses, we're not dealing with disability transfers, we're not dealing with student transfers, we're not dealing with pension splitting, any of the complicated dependent related things on a return. If we're not doing any of that, you do not need to create a second return. You can use something called related party spouse not process. I'm going to show you how to do that. I'm not going to recommend doing it because I'm going to make you delete it all and that's just going to take time. So I'm going to show you how to do it and then you can practice this on your own. All right. So if I'm going to do that, I'm going to open up my Smart Start, and there is a section here that says alimony and spouse not processed. So alimony and spouse not processed is where we're going to put information. We'll come back to this section when we talk about family separations. But if you had a separation in the year, you would put it in here. If you had someone who has been separated for a long time and now you have to deal with support amounts, we would be using ex-spouse was a spouse in the previous year. But if we have a person who is currently a spouse, but we're not going to create a return for them, then we're going to do return of spouse not processed. In this section, we need to answer everything with a blue star. So if I was going to be doing this for this family, I would be putting Baines Eve. I don't need an address unless it's different. If there's a reason why I need to know, I don't need to put that in. I do need a SIN number because that's going to go on the first page of the return for Adam. I need a birth date for my own records and to verify that she is who she says she is, so I have to have a birth date there as well. It's also going to be important to have a birth date if we're dealing with other credits that are age related. Although if you want to do transfers, again, this is not the way to do it. If we were going to have an age amount that could be transferred, we'd have to create a file for that client. Then it's going to ask for net income. And in this case, if I'm not doing a return for Eve, I would have to take a look at her slips and figure out what her net income would be. It's not too difficult. She doesn't have any deductions against it. So it would be 8537. And then TOSI net income, that's something that is going to be beyond the scope of this course. If you have someone who has TOSI net income, that needs to go to a specialist. We just need to confirm that she doesn't have a complicated scenario where you have a family corporation. If you have a family corporation and there's income sharing through that corporation, this number will be different. For all of the clients you guys are doing, it's going to match the same number as her net income. So net income and TOSI net income should be the same. And that's the only thing that you would do. And once that's filled in, you're going to notice that now we're going to have the warning cleared. There are a few other things you could do in here. If you knew that you were claiming a caregiver for Eve, you could say yes, caregiver. I'm going to talk about why that's not always the best idea, but there is the option of doing that. If she was in prison for part of the year, you might need to know that, so you have that information here as well. If she received Universal Canada Child Benefit, UCCB, that's a very old thing, but if she did, you'd have to report that, so there's data for that as well. If she's an immigrant, if she immigrated in this year, you should not be doing that return. Go find a specialist, but you can use this here for that as well. Okay. If she was self-employed, you're going to say yes. That's important for the first page of Adam's return because it changes his filing deadline. So there's a couple of other things here. If she's non-resident, so you will get scenarios. If you're working in an office in Manitoba, almost every office sees at least one of these. You may have a dependent spouse who is not in the country. If they're not in the country, you can say non-resident and put in their Canadian adjusted net income. Make sure you have proof that they are being financially supported, but you can complete that without having to create a file for them, given that they won't have a social insurance number. So that's one thing you might need to use this for. Generally speaking, we try not to do return of spouse not processed. All right. If I did all of that, however, and I went into the return, what you would see now on Adam's first page would be that he is married, and you would see Eve's information here. And you're also going to see that the computer is going to assume a number of things. They're going to assume that she's living with him, and therefore she's a dependent spouse, and it will generate a Schedule 5 for you. And it will take off her net income based on what you said it was going to be, and you're going to get a certain result. Okay, so that's how the related party works. If you have someone who is not filing a return and they don't need any complicated transfers of any complicated issues, you don't need to create a file for them. Please don't create unnecessary files. That's not ideal. So again, if you have someone where their spouse is out of the country and they can't file a return because they're not resident here, in that case, we would use related party spouse not processed. I'm going to take all that out, though, because Eve would like you to file her return. She would like to file a return as well. So we are going to create a file for her. Before I delete this, are there any questions related to this? So related party spouse not processed for today's class is how we're going to do the return for someone where their spouse is not filing a return and there's no reason to create a connected file. Okay, and remember, you can't, if you create something you shouldn't have, you can't uncreate it in real life. Here, you can do that, but otherwise, no. How do I do the highlights? Yes, so if I want to highlight a whole section because I know I'm going to delete it really quickly, which is what I'm about to do, I click on the bottom one, hold shift down, click on the top one, and it makes them all there. That gives me, it's called marked. It marks my data entry fields. Now if I want to delete them, I can delete all of them together. So I'm just going to right click somewhere in my yellow sections and I'm going to say delete the marked keywords. If you have to delete things really quickly, that's the way to do it. Be careful, you might end up deleting things you didn't want to. So if you want to go back and just clear the marks and do it one line at a time, you can. You can select whatever's pre-selected to make the highlighting go away. You're going to say clear marks. All right, but I am going to do it, and I'm going to delete all of this. What I'd like you to do now is we're going to do this the way we would do the file if we are creating a file for Eve. And here, there are a couple of different ways you can do it. I'm going to show you the different ways of doing it, but then I'm going to show you how I do it and why I do it the way I do it. It creates huge problems if you create files you didn't mean to create. You don't want to accidentally add a file to the wrong person. So you can do this from the client list. You can select Adam and you can say, I want to create a new client and I want the new client to be connected to him. That's risky because you're going to notice this is a pretty big list and it's not that hard to accidentally be on a different file. And if I'm on a different file and I'm adding to the family, I'm linking files that should not be linked together, and it's not a good idea to do that. So this is one of those times where I like to go a little bit slower. I want to make sure if I'm connecting someone to Adam that I'm looking at Adam's name while I'm doing it. So I always do this from the data entry screen. In the data entry screen, I'm now on Adam. I want to add Eve, who is his spouse. So what I will do is I will add a new client. Okay, so you're going to go to the Add New Client button up here, and then you're going to stop before you do anything else, and you want to say Add to Current Family. Okay, I'm going to do that again. So I want to add someone, but not to a family by themselves. I want to add them to Adam's family. So I'm going to say Add a New Client. I'm going to change it to say Add it to the current family. Leave everything else ticked and say OK. After we do that, it's going to ask, who am I adding to his family? The default is spouse. Okay, so the default is when you connect someone, the assumption is everybody's married or has a partner. That is not necessarily true, and you cannot fix this if you do it wrong. So if I picked the wrong thing, I will not have a way of fixing it in the office. If you do it the wrong way here, you're going to have to delete that file and try again. But remember, in an office, you can't. So if I had accidentally put dependent linked to the spouse, the only options I have for my client will be that Adam is married to his child or his mother or his grandmother or someone related to him, which is illegal. So that would be very confusing for the computer and everybody else. We would not be able to do the data entry one. So she is a spouse. We're going to say spouse. If she was a common law spouse, you would have to say common law spouse. So make sure you're choosing the right thing because you cannot fix it in an office. You can delete it here and do it again, but in an office you can't fix it. I want to add Eve to Adam as a spouse. You're going to notice it's also going to remind me who I'm adding him to. So I'm saying Eve is going to be Adam's spouse. If that's correct, I'm going to say OK. I'm going to do that one more time. All right, so I'm in Adam. I'm looking at Adam's name up here. I want to add Eve as his spouse. I'm going to say add a new member to the current family. I'm going to say OK. I'm going to make sure that I want her to be his spouse. She is his spouse. I'm going to say okay. And now it's going to open up a section, and you're going to notice it's pink because the assumption is that he married someone of the opposite sex. That is not always true, but the computer will by default make it pink until you change it otherwise. Now we can enter in Eve's information. So I would like you to do that. You can do Eve Baines. Make sure you have her social insurance number. Obviously, it has to be different from his. You need her birth date. It's already pre-selected that they're married because you said that, and I want you to notice there is now a relationship where she is the spouse of Adam. We created that relationship. That's the one we won't be able to change after the fact. We're stuck. That's the only option we're going to have. We can choose common law or spouse of, and that's it. So if we were adding a child and we accidentally said that he was married to his child, we wouldn't be able to fix that. All right. You're still going to have to choose the metropolitan area. It is important to make sure they match. So if you had Winnipeg before, Winnipeg again. If you're outside Winnipeg again. If there's a new phone number, you can put a new phone number in. If there's a new email, you can put a new email. Remember, Eve might want to sign up for online mail and Adam might not. They all have individual tax returns, so that's perfectly fine. I want you to notice one more thing. There is no mailing address section for Eve. What does the computer assume when you add them together and you say they are married? It assumes it's the same. And it does not want you to do entry that you don't need to do because you could accidentally mess up her tax return if you put her mailing address in wrong. So the default will be that she lives at the same address. That's not necessarily true. I have clients who are married to each other who keep separate homes. If you need to add a mailing address, you can use your Smart Start Assistant to do that. So you're only going to do this if it's different. You don't want to enter it if it's the same. But if it's different, you're going to say mailing address. I would like a new address. I'm going to say, sorry, that's not what I want to do. I want street. So I'm going to delete that. I'm going to do keyword street. And it'll open up my mailing address. It's a little messy in the student version. In the office, that's a little bit easier to do. In that case, I could enter her different address in here. That would put it on her return. His would be on his return. You would then have to be careful to make sure that she does qualify as a dependent of his. So if they live in different addresses and she has low income, but he's not paying for any of the things that make her a dependent, you'd have to do some adjusting in the computer. Okay? In this case, it's easy. It is the default. So they are married. They are living in the same house. She has less income than him. You can go ahead now and enter her T4. You're going to notice it opens similar boxes. So we can do her T4, the Wine Cellar Inc. She has 8537. She's in Manitoba. I have 274.52 and a box 18. And I'm going to skip down to box 22, which is 250. I'm going to double check all of my data entry. Did I spell her last name correctly? I want you to notice another thing. I didn't type her last name in. What did the computer assume when I told them they were married? It assumed that they had the same last name. That is not always true. Lots of married couples have different last names. So you might have to be careful when you go in here. The computer will ask for the first name. Make sure you've thought about whether or not the last name is supposed to be the same or different. In this case, it's the same, so it saved me some time, but you have to watch out for that. All right, so I'm going to double check last name. I'm going to double check the SIN number, which is up here. I'm going to double check the birth date. I don't need to do the postal code because it's the same, so I'm not entering it separately, but I am going to double check the tax slip. Everything looks the same. I'm going to give my quality at source check mark, and you should now be able to generate a return, and I would like you to tell me once you have done that what we have as our final result for Adam. So here I'm going to show you one more thing. When you generate a return, whoever's data entry you're on is the tax return you will create. So if I was on Eve when I went to the tax return, I'm going to be on Eve's tax return. So on Eve's tax return, here I am. I have her notes and diagnostics. Everything looks good. I don't have any warnings that I have to clear. I do have to take a look at the return down at the bottom here, but if I want to go into Adams, I can switch it here without doing anything else. At the very, very top, I can select family member on the left. So above where her tax return is, I can switch to Adam. It's going to change the color again. So his will be blue and hers will be pink. That makes it easy for me in an office to know whose return I'm looking at without having to double check the names. If I go into his return again, I'm going to check notes and diagnostics first. I had a warning that I hadn't cleared before. It should be cleared now, so if I recalculate, that warning will go away. I have no warnings for him that I have to deal with. E-file setup is incomplete. That's the only thing I want to see on that page. And now I can go down and I can find his refund or balance owing. Okay. If you got the same number as me, give me a green check mark. If you got a different number, give me a red X. If you have any warnings, give me a red X. If you have the right thing, I want you to take a look very quickly and see what are all the things the computer did automatically for you. So it will have done your spousal amount. It will have filled it in for you. It will know that she's not getting the caregiver amount at this point because you haven't said anything about her being eligible. Okay. I want you to notice the provincial things that it's going to do. It has calculated the family tax benefit for this family. They're not getting one, but they're very close to getting one, so it has calculated for you correctly. I want you to notice that it is going to do the provincial spousal amount as well. So he's going to get a tiny bit of provincial spousal amount. The computer has made decisions for you. By joining them together and telling the computer she has low income and that they live together, you have told the computer she's a dependent spouse. It has gone and added the dependent credits in everywhere that it thinks is appropriate. You may have to decide otherwise. All right, and then you're going to notice if this family is entitled to GST, it's going to give that to the family head in the computer. In real life, it's going to give it to somebody. We don't have control over who it goes to in real life, so you're going to let them know this is a family credit. They're not getting any GST, but they will be getting Manitoba Climate Action Incentive. And again, I want you to notice it has added in the spousal amount. So we're going to start seeing different climate action incentive numbers now. When I show you the answers to your practice problems from this point on, it's going to reflect the family scenario and not the individual scenario. So we now have a spouse attached to the family Manitoba Climate Action Incentive, and if you're in a rural area, you'll have 10% again. All right, good. We have done really well to get to that point. So we have added in our spousal dependent. We're going to add some more people to the family. As I do this, I want to show you the other way to switch between files. So I can get from Eve's data entry to Adam's data entry through the tax return. I can go into the tax return. Whatever return I'm on is the data entry I'm going to get. If I'm in Adam, I'm going to go back to Adam's data entry. If you just want to switch between their data entry in here and not go look at the tax return first, you can do that. So that's where we have this little button that says Open Family Members File. So right next to the Add a Client, if I was in the middle of Adam's and I thought, oh, I should add something to Eve's return, I'm going to click the Open the Family Members File or Control F12, and now it's going to show me who there is in this family. I have Adam and I have Eve. I'm going to say OK, and it's going to take me to Eve. If I want to go back to Adam, I'm going to say Open Family Members File, go to Adam. I can do it that way. If I'm in the client list, you're going to notice I now have a file that's going to look a little different. So I'm going to have Adam, and he's going to be in bold. And I wish I could make this bigger for you. I can't, but you can see it on your screen as well. Maybe I can make it. No, every time I try to make it bigger, that's as big as it gets. Okay. Oh, there we go. I can make it bigger. That's better. So you're going to see I have Adam, who is highlighted and bold, and underneath him, connected to him, I have Eve, who is small and light blue instead of big and green. So now I have joined files, and they are together. So if I want to switch from Adam to Eve, I'm sitting in the client list and I want to open Eve's data entry, I can double click on Eve. If I want to open Adam's entry, I can double click on Adam. So there's lots of ways of getting back and forth between the different family members. Okay, but we have a bigger family because we have Adam and we have Eve, and they have some children. So let's add the children in next. And for this, I'm going to go back to my split screen, and I'm going to see if we can get the information for the dependent. So I want to start with the first dependent that we have. They have a son named Luke. We have a date of birth for Luke. As soon as we add a dependent child, the computer is going to make some decisions about that child. If you are adding a dependent child to a single parent, what assumption will the computer make about that child? From a dependent perspective, if I have a single parent and I have a child attached to them, they will assume what about the child? What tax credit will they give for that child just because we've connected them? If you had a family with a single parent, what tax credit would you give that child right off the bat, or give the parent for that child right off the bat? Elder dependent. So just by adding the child in, you have told the computer that you have done the elder dependent checklist and that they qualify for it. So that's something we'll talk about later, but I want you to remember when you connect people in a family, you are telling the computer that they are dependents in some way. They are connected to you, and there may be credits to share. If that's not true, we're going to have to do some extra work once we've connected them. So what I will say, before you add children to a parent, make sure you know, are they supposed to be there? If they are their biological child but they do not have custody, you might not be adding that child anywhere because somebody else is going to get the credits for that child. So you have to make that decision ahead of time. In this case, Luke is the child of Adam and Eve. Absolutely, we should be adding Luke to this family, so we're going to do that. So how do we do that? I go into the family head again. You have a choice who you're going to connect your dependent to, but if all else is equal, if Luke is the child of both Adam and Eve, then connected to the family head, it's the easiest way of doing it. So I'm going to add a new client, and it's going to say to the current family again. Don't open a file just for Luke. He doesn't want to be responsible for his own tax return just yet. He's quite young and he has no income and no assets. So it's not going to let me do spouse or common law because he already has one, and we can only have one in a given year. So it's going to say dependent, but if Adam had been a single parent, I would have had the option, and I have to think about it. So here I have the choice dependent linked to family head or dependent linked to the spouse. Doesn't really matter which one I do, but it's generally better, all things being equal, connect to the family head. The reason you might do this differently is if you have blended families. So if I have two people who had children before they met each other and they married each other, and one set of the kids belongs to one parent and one set of the kids belongs to the other parent, and I'm going to have some messy, complicated things with those blended families, that's the time when I might choose to connect it to the spouse instead of the other. Or maybe it's an adult dependent where it makes more sense to connect it to that spouse because it is their biological parent who is dependent on them. So you'll make that judgment call as you add the files. In this case, I'm going to do it again. We want to add Luke to the family head as a dependent. So I'm going to say add a new client to the current family, say OK. Dependent linked to the family head is the default. I'm going to leave that. I'm going to say OK. It's going to assume again that the child's last name is the same as the parent's last name. If that's not true, you will have to change it. Lots of children have different last names from their parents. In this case, it's the same. I can do Luke. Then it's going to ask for the relationship. It wants to know, how is Luke related to Adam? So you're going to have a drop-down box here, and you're going to have a whole lot of options. these will determine what credits someone is entitled to. So for example, he might have a dependent who is a niece or nephew. That could be relevant. Think of all the way back to our very first theory class, we talked about dependents, and we had the case of the uncle who was looking after the adult nephew who was dependent because of an infirmity. That person would be connected to his file as a nephew, which would tell the computer he can't be an eligible dependent, but he could be an infirm adult over 18, so I might get a caregiver amount for him, or I might be able to claim medical deductions for him. So that's a way of connecting a dependent, and making that decision will determine what the computer can do with it. Okay, so if you have someone who is technically a nephew but is actually a child because of the tax rules, you have to make sure you make the right choice. All right, in this case, Luke is the son. So Luke is the son, and I need a SIN number for Luke. Luke doesn't have a SIN number because they have not brought one in. Maybe they haven't applied for one yet. If you don't have a social insurance number for a dependent, don't put one in. It'll just be zeros. I do, however, need a birth date because that is going to be relevant to a lot of things. Be extra careful with the birth dates of kids because it changes many, many things on the tax return. Child care can be related to age, so that will be one thing. The time at which they age out of certain things they can claim, like the children's arts amount up to 16, all of those things. So the ages for dependents are always very, very important. Ages of everyone are important. Then I want you to make sure that the metropolitan area matches. You're going to notice there's no address again because we're going to assume that Luke is living with them unless we say otherwise. I want you to notice as well that your data is now green. Green is normally the color we see for dependents in most cases. I will say that can get a little bit buggy with your computer. So if it's not green, it might mean you've picked something wrong here, but if everything looks the same and it's not green, don't worry about it. The next time you go into it, it might be green again. That's one way, however, we know that we're in a dependent file. The other thing I want you to notice is that we have a different set of defaults chosen. So we have as a default childcare, sports or recreational. That's where we're going to put a provincial claim for a fitness credit or an arts amount would go there, and tuition and medical expenses, because it's most common that the dependents we're dealing with are children who don't have income. If you had income for Luke and you had a T4 for Luke, or you needed to enter something, you would have to go into your Smart Start and select the other information. All right, so we have added Luke. What I would like you to do now is go to the tax return and see what has changed on the tax return. If I go to the tax return directly from Luke, it's going to say, we don't have any reason to file a return for him, so we haven't generated one. That's fine. He doesn't need a return. But if I go into Adam, there should be one noticeable difference, and it is the only difference I'm expecting to see, which is right here. Remember, a dependent child can't get an eligible dependent amount for Luke because he was married for the whole year, but climate action incentive will be different. Something else will be different. Why has their tax return changed? They've gotten CCB, that's one thing, but the actual tax return, the refund, should have changed. Why will it have changed? More members of the family means more family tax benefit. So the federal form will look exactly the same, but our provincial numbers are going to change because we have an extra person in the family. And the computer knew that we had an extra person in the family, and off it went. Now, that is something that you can take a look at here for Canada Child Benefit. I want to demonstrate that the assumption is that Eve will be the one receiving the Canada Child Benefit. Okay, that doesn't necessarily mean she's going to get it, but if they're entitled to it, you'll probably find it on her return, and you can see how much they're going to be getting. So just by filing their returns this year with one child in the family at the age that Luke is, with the income they have, you're expecting to see a child benefit of $4,155.46, and you can find that on Eve's return. Okay. I want to talk very briefly about transfers and optimizing at this point. And I'm going to talk about things like, so GST as well will have changed for the family, but that will show up on Adam's return. I'm going to bring you to a section of the computer here in the textbook that I think is going to be really useful for you to know. So bear with me while I flip through. I'm going to go back into my table of contents. When you have dependents, the computer will assume a lot of things. So it will give the most beneficial things possible to the right place as much as it can. But sometimes we have to make changes to that, either because we want to move things around. Maybe we want to change who is receiving a refundable credit. Maybe we want to decide who's going to claim their donations because they have a very strong opinion about who they want to give the donations to, or they have an opinion about who they want medical expenses to go to. We may have to change things that are the defaults. We have two ways of doing that. It is in your textbook in this section, so as you go through, there will be information about it here. But I actually think if you have to do what we call optimizing or transfers, if you have to change a setting that the computer has done as a default, I'd like you to think about the appendix as a really good resource here. So when you go into your appendix at the very bottom, we have an appendix C, which gives you the different scenarios when you would want to choose transfer, when you would want to choose optimize, and then it has a third one, which is override. And I'm going to tell you, never do override. If you have a scenario where you think you need to do override, you should be asking for help because there's probably a way of doing it without doing an override. Override will make a return ineligible for e-file in almost every circumstance. So really don't want you doing override, but it's there. If there is a scenario which comes up sometimes the tax software hasn't updated properly and we have to deal with it, there are ways of doing overrides for that. Or if you're working on a paper return, you may need to do an override there. But most of the time, we can solve that without doing an override. So overrides are in here, but try not to use them. Optimize, we do if you want to decide who between spouses is going to get something. So if you want to change the split, for example, if you had a first-time homebuyer amount, you can choose if you want it to go to one person or if you want to split it. You're going to use optimize to do that. You go into the person who's getting the credit, you choose optimize, and then you say, I want the credit to go somewhere else. I'll be demonstrating this as we go through so you can see how that works. But the ideas for how to do it and when to do it are here in the appendix. Generally, you go into optimize and you say, split this much out or claim all by the person. Optimize is to transfer credits between spouses where you have options. Okay, so that's the best option if you have a decision to make between married people or common law people. Sometimes you have a credit that is connected to a dependent. So if it's a credit specifically connected to a dependent, like a caregiver amount, like medical expenses, and you have to change where it's going, tuition would be another one. If you have tuition that you want to decide who is going to get that tuition, we would use transfer-OV for that one. And again, I'm going to demonstrate these. Those are done from the dependents file. So that's if you have one specific thing coming for dependent and you want to direct it to another person, as compared to I have a choice on the tax return between two people and I want to decide who's going to get it and I want it to be not the default. If the default gives you the right answer, don't do anything. If you've got what you want and the return is doing what you want it to do, leave it alone. But if the default is giving you something you don't want, maybe it put the donations on one person because that's the family head, but the other person could also use them and they want them, you can use optimize to move from one family's file to another. So one family member's file to another one. Okay, so there's a really useful appendix. I highly recommend knowing that one and using it as a resource. Anytime you have to do a transfer and optimize to decide which one you should do and how to do it, go into your appendix to find that. All right, I will give you more examples of that as we go through. So I want to go back into our file now, back into my in-class exercise. We have a dependent named Luke. He's in, he's done. We also have their daughter named Ruth. We're going to enter Ruth, but I want you to notice something else about Ruth. How old is Ruth? 20. So she, first of all, before we add the files together, should find out if she is a dependent. We're going to ask, what do we know about Ruth? Well, she's still living at home while she's going to school. We're paying for everything for her. Great. She's dependent. We can add her file together. There is a reason to connect their files. So we're going to do that for her. I'm going to go back in here. I'm going to go back to Adam because I like to add my dependents from the same file where I can see them. I'm going to collapse everything here so I can read it at the same time. And we're going to add a dependent named Ruth. So from Adam's file, making sure I'm looking at his name, I'm going to add a new member to the current family. It is going to be a dependent linked to Adam. I'm going to leave everything the same in this case. And in this one, because I know she has some income, I might choose already in advance some of the Smart Start. Maybe she's going to file her first return and I want to have that, other personal data. Maybe we're going to do elections. I would do that. This is the point where when you have an adult dependent, you might automatically pre-select a few things. Or if you're going to be like me and you're going to use keywords, then you don't have to worry about it because you know your keywords. But it's always nice to have what you need before you start. So Ruth Baines, going to put in Ruth. She is already connected to the family who is the head, who is Adam. We have to say, how is she related to him? She's his daughter. If she has a SIN number, which she does, we need to put that in. We have a birth date, which is the 16th of March, 2002. She is single, but we should check that because she might be common law at this point. Maybe her boyfriend moved into the house with them. Right? So here we go, CMA Winnipeg. If she has an email, I'll enter an email. If she has a phone number, I'm going to enter her phone number. She's an adult. I might want to talk to her and not her parents. If I had that, I would put it in. And then I have some casual labor for her. So in my case, I'm going to do keyword tips just to get casual labor. I would identify what it was, and I would put it in here, $350, so she has some income as well. Okay. When that's done, I go to the tax return for her, and it will generate a tax return for her, probably in green. And you're going to notice a few things there. She is going to get her own GST credit because she's 20. She's going to get her own climate action incentive because she's 20. She gets her own. She is going to get a refund because she gets her own provincial credits. So she will get her own provincial credits. She will get her own family tax benefit. She will not be part of the family's family tax benefit. She will be her own family tax benefit. And she'll get her own refundable credits. So she's going to have a completely separate return. But I've added her as a dependent for other reasons because they might be supporting her in other ways. Okay. Are there any questions up to this point? So we should now have for Adam a final result of 1142.96. For Eve, we have a refund of $250. Luke doesn't have a tax return. And for Ruth, we should have $191.50 in provincial credits. Okay. Let's stop there. We're going to take another 5-minute break. You can get caught up at this point. If you're not finished your data entry, work on your data entry here first. If you are finished your data entry, but you haven't done the Barry Hockley personal information in T4, go ahead and do that because we're going to try to finish. We're doing medical expenses next, and it's going to go fast. So I want to make sure everyone's ready. We'll take a break until 11, and we're going to come back and finish this chapter. Welcome back from break into our last push for today. See how much we can get done in the next hour. Give me a green check mark. Let me know if you're back. So I'm going to do this next section out of order just to give you a heads up because I want to make sure I get through as much data entry as possible so that you can start working on your practice problems for this week. We're going to do donations next. So if you can find in your book at the very bottom of your in-class exercise, you will see some charitable donations for Adam and Eve. Let's assume the family came to us and they said, here we go, we have donations, $500 for Canadian Cancer Society, Heart and Stroke, Red Cross, Doctors Without Borders, and Alzheimer's Society. We're going to make sure that they have those donations receipts, that everything is valid, that they are the correct year, and they are the correct correct organizations. These ones all are. Whose return can we put the donations on? So if I have a choice, what are my options for donations? I can give them to Adam, absolutely. I could give them to Eve and I could split them. Why would I not necessarily want to give them to Eve? Well, her taxable income is $8,000. She doesn't need any more non-refundable credits. If I give them to her, they will be wasted. So the computer will optimize depending on whose you enter them. It is important until you really know your tax theory to enter the information connected to the person whose name is on the receipt in most cases. So the person who paid for it really should be the person whose data entry we are doing it on, because the computer will probably know the tax theory better than you might know it, and it will make the right decision. So I'm going to show you what would happen in the computer if we entered all of the donations on Eve's return. Let's assume that Eve is the person who likes to contribute to charity, so her name is on the receipts. I'm going to have you do the same thing. So if I'm in Adam's file right now and I want to go to Eve's data entry, I like to switch right here. I'll make sure I'm in Eve's return first. I'm going to go into her data entry, and down at the bottom you're going to see we have an option for charitable donations and gifts. This is one of the standard ones that comes up all the time, so we tend to keep it at the bottom of our regular taxpayer and spouses information. I'm going to open up donations and gifts. We're going to use the donations section, not the donations carry forward section. That's only relevant if you had a prior client who had made donations that hadn't been used in the previous year that we knew about that we're carrying forward. So in most cases, we're just going to go donations, and then you have to choose what type of donation they are. So if it's anything other than gifts to registered charity, you may need to get some help. If it's certified cultural property, find a senior associate for help with that. If it's ecologically sensitive land and so on. U.S. charities, remember you have to have U.S. income to claim it against, so there are some rules there. You're going to go to your textbook and look that up. United Nations and its agencies, you have to look it up. If it's gift to a government, which is not a political donation, it's a gift to a government, so I'm giving money to Canada or to Manitoba or to Winnipeg, if it's a municipality, then you might do it there. And then universities outside Canada. So any of those ones will have special rules. Make sure you look up the special rules. These ones are all regular gifts to registered charities, which is the majority of what we do. So I'm going to choose that. Then it's going to ask for a name and an amount. So I'm going to say Canadian Cancer Society, and I'm going to say 500. It will then say donation type. This particular keyword you're not going to enter anything for unless you're doing a return from 2013 to 2017. 2013 to 2017, there was a special rule. It's called the first time super donor credit, first time donor super credit, something like that. In that case, we need to do a bit of extra data entry. But if you're doing that, you're going to be looking up the rules for it in that year. And in our textbooks for those years, which you would have access to, it will also show you how to do the data entry then. So for this course, you're always going to leave donation type blank. And then we go on to the next line. It'll open up a new one. We can do another one, heart and stroke. You could, if you wanted to, add them all together and just say various. However, that will make your life more difficult on the other end of things if 3 years later they get audited for their donations and they say, I'm claiming donations of about $3,000, and you're going to say, where was the $3,000 receipt, and you don't have a $3,000 receipt, if you type them all in, it's going to be in the computer. So when they get audited after the fact, you can say, oh, we've lost the receipt for Red Cross. Let's contact Red Cross and get a copy of it so we can keep that donation for you. So I would be typing them all in. Now, if you have 3 receipts for the Canadian Cancer Society, put them all together, and then you might put a note in it saying 3 receipts so that you know that they had 3 donations. But definitely I would be identifying the individual charities so that when the audit comes in the summer, I can backtrack and find out where I got those numbers from. So I have put all of these into Eve's file, and everything is there. I've done 1, 2, 3, 4, 5. I have 1, 2, 3, 4, 5. I do not have to do check marks on this because they are receipts. They're not tax slips. If I go to the tax return, you're going to notice that they're not in Eve's return. They're not there. It does say donations, but it isn't going to claim them for herself. There isn't going to be a donation schedule on her return. If I go to Adam's return, it is going to be there. Adam's return will have a Schedule 9 because the computer looked at it and said, well, Eve doesn't need it. Adam's the family head. I'm going to give it to the family head. He can use it. And it's going to show $2,700. It'll have his net income to make sure he can claim that much, which he can. And it's going to portion out $200 at 15% and the rest of it at 29%. And it will give the claim to him. That is the default. The default is give the donations to the family head if the family head can use them. If the family head can't use them, give them to the person who can use them, and don't split them. That might not be what your client wants to do. So I'm going to show you now how to do an optimize where you can say what you want the client to do. So if I wanted Eve to claim some or all of the donations, I could override the default position using the keyword optimize. So I'm going to do that. I'm going to go into Eve's return. I'm going to say optimize. Then it's going to open up a little box and it's going to ask me, what do I want to mess around with? What do I want to change? If I go into federal, I can say charitable donations. I want to change something about the donations. I'm going to select that. Then it's going to say, what do you want to do? I can choose the default. Please don't choose the default. If it's default, leave it alone. Don't do any of this. I could say I want Eve to claim all of the family's donations. I want hers, everything that I've entered in her data entry, and anything I've entered in his. Or I could say just claim hers by herself. Or I could specify an amount. I could say I want her to claim $200, and then anything else, I'll let the computer go where it wants to go. So if I did that, I would then go to her return. She still wouldn't have a donation credit because she can't use it, but what it should have done is reduced what he's getting. If it doesn't work, the computer is going to be really fussy about it and go, oh, you really shouldn't be doing that. I don't want you to do that. You may have to do some additional ones. But this is where your optimizing is going to go in and going to change options. So claim specified amount that she can't use, the computer doesn't want to do that. If I did claim her own and her spouse's, okay, it should allow her to do it. She can't claim any this year, so she'll have a carry forward for next year. He won't get a claim. So if I did it that way, we're going to have here no schedule for her, but you're going to notice on his, no schedule for him either. No donations for anyone because we put them on hers and we're carrying them forward on hers. Then I would put a carry forward note in her file. So optimize is going to be your way of splitting things between people if they can use them. Okay, are there any questions about how to do optimizing? We're going to come back and look at this again. So I'm going to go in and I'm going to take those controls out because it is not a good idea. If I did it this way, I would be wasting those. My better option is just carry them forward anyway. If they don't want to claim donations this year, they don't have to. I can just give those receipts back and say, bring them next year. We'll do them next year. But if she was adamant that those are her donations, she wants to save them until she can use them, Your best bet is don't put them in, give them back to her and tell her to bring them back later. Okay, so that is charitable donations. Enter them, generally speaking, until you really, really know what you're doing, enter them on the person who paid for them. Because the person who paid for them is the person who should claim them, and then if it can be split between spouses, the computer will make the optimal decision for you, and then you can change it if you want to using Optimize. Okay, so I've taken it out. We've given them back to Adam. Okay, now that's how we do donations if they are receipts. But remember, you could have a donation that is part of a T4 slip. So if we go into Adam's return, I'd like you to open up his T4 slip, and I'm going to tell you that he had a box 46 with $55 in it. So I would like you to add in on Adam's T4, box 46 equals $55. If you do that, when you put your donations in, you are going to have an additional donation amount. So when I go to the schedule that I have created for him, now I have $2,755. If I want to know where I got that number from, wherever the Schedule 9 is, you're also going to have somewhere down at the bottom confirmation of where you received the donations from, whose data entry you put it on. So I have a T4 slip from Adam of $55, and then I have Eve's donations. It's going to tell me how much is available for the tax credit this year, all of it. It's going to tell me who's claiming it. Adam is claiming it, and nothing is being carried forward. And it's going to say how much is being used of his own this year. Okay, so this can be useful as well. So how much is being used for each person? If you have to go find an error in your data entry and you think you've put something on the return and it's not showing up, this is your way to find out what did you actually put on the return and what is the computer doing with it. All right. So that's donations. Pretty straightforward. We're going to keep going. We're going to jump into medical expenses now. That being said, we're going to do a quick check on the numbers. So with the donations in, we've changed Adam's refund again. Now his refund is $2,380.08 because we've added in a donation credit. Okay, if you have a different number, let me know and we'll troubleshoot for you. But we're going to keep going otherwise with what happens when you have infirmities and disabilities. So I'm going to start with Eve, and I'm going to tell you that something happened in a previous year and Eve has an infirmity. So we have to get that information into the computer so that it knows that there are potential tax credits related to infirmity. So for this section, if you go into the Smart Start, you're going to find somewhere near the top, you're going to find an infirmity box. You can use the keyword infirm or infirmity, or you can use the Smart Start. If I go into my infirmity section, I'm going to say what type of infirmity. It doesn't necessarily have to be a huge amount of detail. So if your client isn't comfortable giving you a huge amount of detail, that's fine. If there's something relevant that might be applicable, like maybe it's a mobility impairment that might affect what they're entitled to, you might put that information in. If you don't have any information, you're just going to put what you have. So I'm going to say she is infirm. What will the computer assume is the default? So if I put infirm in for Eve, off of the bat, what does the computer assume she is entitled to? And I will give you an example here. Go to this line. What is the default in the computer when I enter infirmity? It assumes she has a disability on file with the CRA. It assumes she already has a T20 2021. It just says she has one. That might not be true. If it's not true, because remember I didn't say she was disabled. I said she was infirm. If it's not true, we have to tell the computer that it's not true. So The default is that they have a disability on file with the CRA. You may need to change that. In this case, we do need to change it. So I'm going to go back into Infirmity. I'm going to open it up, and I'm going to find a disability line. On the disability line, I'm going to choose use disability amounts to default. Don't choose that. It already is there. Leave it alone. Not infirm, I shouldn't have entered this at all. If she's not infirmed and not disabled, I should not have done any data entry. Leave that one alone. I don't recommend use disability amount first for new application, although if you do, it will generate a disability form for her. It should generate one, although I don't know if the student program does because we haven't updated it for the new form. Disability certificate, you can say I want to create a disability certificate for your client, and that will give you her personal information, which you can print. She can take it to her doctor. That being said, honestly, I do these ones with the fillable forms. It's just easier. They look better. It prints really nicely. So I just use the fillable forms for this. Why would you maybe not recommend that she file it with this on the return if she's applying for the first time? So this is the first time that she's going to do the disability. Why would I maybe not want to do it this way? What will happen to her refund and Adam's refund if I make the application as part of the tax return? Because it's going to give her a transfer that the CRA doesn't agree that she gets until they've processed the paperwork, and it's going to transfer it to Adam, and they won't assume that he gets it unless they've processed the paperwork. It's going to delay everything. So if this is her first time that she's entitled to disability, but she hasn't applied for it yet, I would leave this off. I would file with the infirmity, and then I would apply for the disability, and I would ask to adjust it back. So what you're going to do are really only two pieces of data entry. If they have a disability certificate, leave it blank. Put infirmity, say what it is, and leave it alone. If it's infirm and they don't have a disability, you're going to say do not use disability amount, and that's all you're going to do. There is a caregiver box. I want you to leave that blank. You're only going to use that box if you want to say that they do not get to give a caregiver amount to someone. If someone else doesn't get a caregiver amount for them, you're going to say no. That would be the case if someone unconnected to her is claiming a caregiver amount for her, which is a very rare scenario. So you want to leave that blank in all circumstances unless you need to override the default. So we have infirm. If we had details, we'd put details in. We're going to say disability do not use. Now when I go to her tax return, you're going to find that there is no disability amount for her, which is correct. I don't want there to be one because she's not entitled to it. But you will get more information on Adam's return. So what's the first thing that you should be looking for on Adam's return? Caregiver amount. It will have added the caregiver amount automatically. Because he has a dependent spouse, her income is low, and she has a disability, he's going to get that. And then if one applies, it will also calculate the top-up. If there is a top-up, it will calculate the top-up. In this case, there isn't. The computer will do that automatically. Good. On the provincial side, will there be a caregiver amount? Will he get a caregiver amount for his spouse in Manitoba? Do you see one? I don't see one. Is that correct? If you're not sure if it's correct, you have to go back to your provincial supplements. Remember, caregivers are not applicable provincially for spouses. You can get a caregiver amount for an infirm spouse federally, but in Manitoba, you cannot get one provincially. The computer knew that, but you need to make sure you understand why they're not getting one. All right, now we've added a caregiver amount. What will happen to Adam's return? It should increase even more. So now we have a refund of $2,724.33, which includes a caregiver amount. If you got the same answer as me, give me a green check mark. If you got a different answer or you have a question, give me a red X. If you're going to enter infirmity as well, I want you to remember that you have to have some documentation of it. So make sure that she can get a doctor's letter if she needs a doctor's letter to say that she has a physical infirmity. You don't have to see the letter, you just have to know she can get one. Okay, waiting for a few more people. I want to make sure we're all together because I'm going to add a whole bunch more information in a minute here. Okay, Kendra, you've got it as well. Great. Okay, let's keep going then because I'm not seeing any red X's. If you need me to go back, let me know. All right, so we have done an infirmity. You can see what that looks like. I'm going to tell you some more information. I should write that in the chat window in case anyone has missed it. So Eve has an infirmity, not a disability. Ruth has a disability certificate on file. Okay, so we now know that Ruth has a disability certificate on file. She is an amputee, so she has lost a limb. So I'm going to go into Ruth, and I'm going to go to Ruth's data entry, and again, same keyword, infirm. If I know what it is and she's comfortable with me tracking that information, I'm going to say the reason why. Otherwise, I'm just going to say disability certificate on file. If there's a date when the disability certificate is going to expire, I would put the years. So until 2025, except if she's an amputee, she won't have it. It will not expire. So I'm not going to put it in for her. But if that was relevant information, I would put it in here so I have it in the future. And that's all I'm going to do. Because the default is that she gets the certificate, I'm going to leave that as is. And when I go into her return, remember she has basically no income. She does not need her disability certificate. Where will it go? She has a disability amount. Where will it go? She's getting her basic personal credit. She's getting the Canada employment amount. Who will receive her disability credit? Dad will receive it. So now when I go into his return, I should be seeing disability amount transfer from a dependent. And remember, when you do that, you need a worksheet to see how much you're transferring. So if I go to the worksheet, it's going to fill in the information there as well, which is all of the stuff about Ruth. So who is transferring it? What is the base amount? She's not going to get the supplement because she's 20. She's over 18, but if she was under 18, there might have been a supplement amount there as well. Okay, and we're going to have, in addition to that, we have to find out what she needs to use first. She needs to use none of it, so she's going to transfer all of it to Dad, and there it is. The computer did that. Now, again, you want to make sure before you do this transfer that it shows up that he is eligible to receive it. So he has to be eligible to receive the transfer in order for this to work. If he's not eligible to receive the transfer because it's not on file, you want to get that corrected first before you do this transfer. If you have to, you're going to override the transfer. You're not going to allow the transfer to happen. File the return without it, and then file an adjustment to get the transfer with the proof that he is supporting Ruth by giving her shelter. So she's living at home. He's providing her shelter. He's entitled to the transfer. Make sure it's in the computer first. If you had to change who was getting the transfer, you would do that with a transfer OV. So now if I go into here and I wanted to do, instead of optimize, I'm going to do transfer -OV, and it's going to open up this one here. And I have a couple of choices. And the one that I would be looking here would be disability amount transfer from a dependent. And I can choose family head, spouse of, or claim by dependent. So I could transfer it to the wrong person. I could give it all to mom instead. Do the transfer there. That's not going to help mom, and I wouldn't want to do that otherwise. Or if I wanted to say don't claim it, I could say specified amount 0 and then ignore the balance. So you can kind of move things around if you need to move things around and get rid of that transfer. So isn't the program choosing the best? Often it is, but remember, sometimes we have blended families. So sometimes she will be connected to one person for one thing and connected to somebody else for a different thing, in which case you want, tuition credits to go to one parent and you want the disability transfer to go to a different parent, and we have to make the computer do that. So yes, often the program is correct, but not always. And those blended families are the times where we use these the most often. So you'll have a family with, kids who are from multiple different families, multiple different parents sharing things among each other, and then we really need to make sure we know how to use these. So if you have a scenario where you need to do this, my best advice, go to your appendix, follow the instructions for the appendix, and then whatever you've done, go in and make sure that it did what you wanted it to do. So I'm going to take this out because we're not going to do any of this. But if you do end up doing transfers or optimize, don't stop there by doing the data entry. Go look at the return and make sure it did what you wanted it to do. Okay? So we did a disability for Ruth. We saw that the disability transfer happened for Ruth. What else did Adam get as a parent of someone who has a disability? What additional credit will he have gotten? Caregiver as well. So again, the assumption is that he will get everything he can get, and if he's not entitled to it, we have to tell the computer that he's not entitled to it. So I want you to notice, with a disabled dependent, he's going to get the transfer and the caregiver for Ruth, and then because Eve has an infirmity, he will get caregiver for Eve as well, and if Eve had more income, he would have gotten a top-up for her. The computer will handle the dependents, but you should be checking on them. Okay. Are there any questions about the disability tax credit and about disabled dependents generally for caregiver, all of that stuff? I always say start with the big ones first. Do your disability amounts first. Make sure they're in. Do your infirmity. If you have infirmities, you get caregiver amounts second. Make sure if you have caregiver amounts from dependents that you've connected the dependents so you can do it. And then if none of that applies, because it might not, or if it does apply and you've done it correctly, the next thing we look at is medical expenses. Okay? Again, I cannot stress this enough. Always, and I still do this, always enter the medical expenses on the name of the person for whom the medical expense was paid. So that is going to be very, very important, because if you enter it on the wrong person, the computer will not necessarily put it on the right line, and you might have a problem later. So when you have medical expenses, you want to sort them on your desk according to the name of the person for whom the expense was paid. So we have some expenses for Luke. We have some for Adam. We have some for Eve. We have an older one for Eve. And then we have some expenses that are Ruth's expenses, but Eve paid for them. So Eve paid all of these. Out of these medical expenses, which ones do we want to include? So let's do the theory first. We have a June 6, November 15th, December 18, $100. We have a December 1, 2020 for $500. And we have a Ruth for 18. We want to make sure we get that 1,500 for sure. We want November 15th in there. So we have to make a choice between December 18 of 100 or December 1 of 500. Which one is better? Would you rather have $500 or $100? I'd rather have $500. So we're going to want to change our medical year. That's going to be a thing we're going to have to think about. What I'd like you to do now, and I'm going to show you how to do it so we can do one first, and then I'm going to let you do them as fast as you can. You're going to go into each person's file, and you're going to enter the medical expense for each person with the date. So I'm going to start with Eve, because that's the oldest one that I have. So I'm going into Eve's file first. I'm going to do my split screen so I can see what I'm doing. Down at the bottom, I will have medical expenses. And you're going to notice we have a lot of different options for medical expenses. We're going to get through as many of these today as we can. I'm going to try really hard. The generic, basic, there are no special rules ones are going to go on the medical line. We'll talk about medical specific in a minute, but these are all general things. It's eyeglasses, it's dental, it's contact lenses, it's prescription. So we can do it on the regular line. You have to put a date in first. So I'm going to put in December 2020, and I'm going to say prescription, and I'm going to say 500, and that's an expense for Eve. My next expense for Eve is December 18th. I'm going to enter it anyway because I want you to see what the computer is doing, and it's going to help me with carry forward. So I'm going to go ahead and put that in, and I'm going to say contact lenses, and I'm going to say 100. Those are all the expenses I have for Eve. When I have Eve's done, I'm going to go into the next family member, and I think I'm going to do Adam next because that's a big one. Again, to go into family members, I can go to this Open Family Members File button, go into Adam, and I'm going to open up his medical expenses, and I'm going to enter in 15th of November. Make sure your dates are correct and complete. That is going to be important. Dr. Fang Dental, not sure I would be comfortable with that particular name of a dentist, but you never know. Maybe he's a really great dentist. And so that's it for Adam. Go ahead, do the rest of them. So let's go in. I'm going to do Luke next. Medical expenses down at the bottom for Luke will be June 6, 2021. Eyeglasses, and that's 320. And I think that's it for Luke. And then I have one for Ruth. Ruth in particular needs to be on her data entry because she is an adult. And because she's an adult, her expenses should be going on line 33199. So here I'm going to have the 12th of October, 2021, prescriptions, 156. When I have finished all of that, the computer will decide how much to give people and what they should get. So it will make that decision for you. Who do you think it will give the medical expenses to? I'm going to guess Adam because Eve can't use them. So my assumption is it would go to the lower income spouse if they need it. They don't, so it's going to go to Adam. If I have all of that done, however, what I want you to notice is it has done medical expenses and it has put them on Adam, but how much and which ones did it give? So to find that out, you can double click on the medical expenses line, or down at the bottom you can go to medical expenses. Which one are we missing? Give you a minute to get it in there, and I want you to tell me which medical expense is it missing that we wanted it to give, but it's missing. All right, the 156 is there, but it's down at the bottom because it's on line 33199. So that one is there, but one of them is not. The 500 is not there. Why is the 500 not there? Well, the default is to use the calendar year. So we did the data entry to tell the computer there's a 2020 receipt we can use, but the computer doesn't know that we want to change the medical last date. We have to tell the computer to do that. So this is not optimal for my client. I am missing a receipt that I would like to claim. So in that case, I'm going to go in. And I want you to notice again, what it did was it decided all of Adam's will go to one person. Eve's will go to the same person. Luke, who is a minor child, all of this will go on line 33099. That is correct. And it knew that Ruth's have to be reduced by 3% of her net income, which it did for you, and claimed it on 33199. And there it goes. So Lee, we're not going to delete it, but we're going to change the medical last date. So that's the next thing we're going to do. So I just want you to see very carefully, by entering them on the right person, it did the data entry correctly. If I had taken all the receipts and put them all on Adam's data entry, he would have had the wrong number because this receipt here would not have been reduced by Ruth's income, which it has to be. So make sure you always do it based on the person. The computer will make better decisions than you will, especially if you're going quickly. So we want to get in that last one. So we have to change our medical last date. What do we want our medical last date to be? If we want to get a December 1, 2020, what is the last date we can use in 2021? I want to include December 1. I have to go to November 30th. So that's what I'm going to do. And for this, I'm going to go back in. We have to do this on each of their files. I'm going to say medical last date, and I'm going to pick 30/11/2021. So I have to tell the computer we're changing the year. So I'm going to go 30/11/2021 on his, and then I'm going to go into each one of theirs, make this a habit so that they always match. If you change it on one, change it on all of them. 30/11/2021, especially for Ruth's, because you can make mistakes by claiming things you shouldn't be claiming. You can't overlap years. If you do that, the CRA will disallow your medical expenses. I'm going to do 30/11/2021 on Luke, and then on Ruth, I'm going to do 30/11/2021. And if I do that, and I go to the tax return, and I look at Adam, and I take a look at his expenses now, I want you to notice it has now included the $500 prescriptions from 2020 that I wanted to include. I have to have been careful and made sure I didn't claim any medical expenses last year up to that date. So anything before that is fine, but anything December 1st or later I can't have claimed. And if I did it correctly, here we go. So now he's going to get more, which is what we want to do. I would at this point be making a note in my file. I'm not going to do it because we're going to be running out of time, but in your general practice, if you are carrying forward a receipt you haven't used, you should make a carry forward note. Use the keyword notes, not notes annual. Keyword notes will carry it forward to next year, and we'll say we changed the medical last date. This is what we changed it to, and this is the receipt we didn't use. Remember, medical expenses can be found in other places as well. He might have had, for example, he might have had a box 85. So let's assume that he did, and his employer started a premiums program on January 1st. So from January 1, Adam T4 has a box 85 equal to, I'm going to give you 1,380. Okay. If that was the case, when we did the autofill my return, it would have put that number in for us probably. So box 85 is going to be about halfway, and it would have this, and we know that that's from January to December. We know because we've asked him that he didn't have any medical insurance from work before that. January was the first month that happened. What problem do we have now? If I put a box 85 in, I'm going to be claiming medical expenses for premiums from January to December 2021. What do I have to do? My medical last date should be November 30th. Otherwise, I can't claim everything. What should I be doing now? I have to take a portion. So you have to prorate it out. If he had the premiums all year and the year before, and we hadn't claimed them the year before, we could go ahead and do it. But we want to make sure, in this case, it's starting from January, we're going to have to take it out. So what you can do is go in here, and you can say times 11 divided by 12. The computer will do that for you. Then you're going to put a note. I'm going to show you this note because it's a very important note. T4 box 85 equals 13, what did I say it was? 1380. Med last date, November 30th, 2022. Premiums for Jan to November only. 1 month carried forward. So why did I change the number from the tax slip? If I go back into that file later and I have forgotten what I did, I have my note there saying, Oh yeah, that's why that number doesn't match. And I'm going to stress this as well. When you're doing autofill my return, if you're not claiming medical expenses because they don't have enough to use them, and the 85, box 85 is downloaded automatically, you should make a practice of taking it out if you're not using it. If you don't need it, don't claim it, because claiming it when you're wasting it is going to limit your options in a future year. Maybe they had some premiums and a big medical expense, but not enough to use at the end of the year. If I put the premiums on and I didn't put the medical expense on, next year I won't be able to do medical last date. So when you do autofill my return, box 85, if you're not using it, if it's got no benefit on the return, if it's not showing up on the return, take it out. All right, so now we have a correct set of medical expenses. What I would like you to do is tell me what your final answer is. You should have $1,265 medical premiums for Adam plus dental, prescriptions for Eve from 2020, eyeglasses for Luke from the middle of the year, and then on line 33199, you're going to have some prescriptions for Ruth. And in Adam's return, nice refund. If you've got the same number, give me a green check mark. If you've got a different number, give me a red X. I'm going to do my best to finish today. I might not get all the way to the end, but I think we can do it. All right, so Lee, if you have a different answer, what I would like you to do is take a look at your medical expenses and tell me which medical expenses you are claiming. So you can do that by going down to your medical expenses under Tribal Nations. Give me a list of which ones you have. Okay, everyone else would like to get you to the same point. You have 126, 1500, good. 500, yes. 320, yes. Did you put Ruth's in? So did you put Ruth's data entry in as well? If you go down to line 33199, what do you have? Total is 135, so that's going to be a problem. Double check her prescriptions, make sure it was 156, and then I want you to double check her income. So take a look at Ruth's income as well. So Ruth should have had income of 350, and she should have prescriptions of 156. Unless I did it wrong, which I might have. I will double check my numbers. Yep, Pharma plus 156. Okay, did everyone else get the same number as me? If you got something different, give me a red X so we can troubleshoot together. Give everyone one more minute, and then we're going to go ahead. I still have more medical expense related things to do, some quite difficult ones. Go ahead. All right. So we have done the majority of the types of things you're going to deal with for medical expenses, but remember, there are other types of medical expenses that are going to change things on the return. So I'm going to go into, who's a good file to do this on? I'm going to go into Ruth's file to do this, just to give you some examples of what could happen if we had other types of expenses. So if I went into medical and I open it up, if it's a standard medical expense with no special rules attached to it, you just entered on a medical. But if it's a specific type of expense, you're going to go into medical specific. So medical specific, you might have attendant care. If Ruth had had attendant care of $11,000, what would change on Adam's return? So if I claim attendant care more than $10,000, what happens to Ruth's disability amount? It will go away. So the computer sometimes will make a decision for you that is the best decision, and sometimes you will have done a thing and you'll have to look at it. So that I'm going to tell you, rather than telling you what happens, as you're doing your problems and your exercises, I want you to find out what's happening. And sometimes it's messy because you're going to have to look at someone else's. I want you to notice what the computer did for you in this case. You don't have to do this. I'm just going to show you. It limited the attendant care to 10 and kept the disability transfer. It did that automatically for you because that's what it said was best. So it should make a good decision for you, but if it's attendant care, you have to think about it. So this will allow the cost of attendant care up to the max and keep the disability transfer because the computer knows that that rule exists. Now, what if it wasn't attendant care? What if it was nursing home? So if I said, actually, she was in a long-term nursing home and it was $500, what would happen to the disability amount if I claimed any amount for nursing home fees? Nursing home fees, what happens to the disability amount? It disappears. The computer will do that for you. It will make it disappear because it knows that you're claiming nursing home fees. So if you put it in for nursing home fees, you want to make sure that that's really what you wanted to do. Take a look at the tax return. I cannot stress enough. You put something in medical expenses, go look at the tax return and see what it did, because maybe it didn't do what you wanted it to do. If those nursing home fees are going to make the disability amount go away, you might not want to claim them. Or you might want to get a breakdown and claim some of his attendant care. You have to make those decisions. If you just put the data entry in, the computer will take what you've told it to do and it will do exactly what you ask it to do. So I'm going to take that one out. There are a few other. You could claim moving expenses up to $2,000 as a medical expense if you're moving into a more functional dwelling. The computer will allow you to do it here. You have to calculate it by hand and keep notes on what you've calculated, and then you're going to put in the final amount here. And then if you have a van adapted for wheelchairs, there's a special rule about that. Look it up. If you did, you can put it in here as well. I'm going to take this out now. Most commonly, we will put attendant care in here. I want you to notice there's another attendant section. We'll talk about that in a minute if we have time to talk about that today. That's where we're doing disability supports. If we're doing medical expenses, it's all going to fall under the medical category. So all medical expenses will show up inside this dotted line here. Okay, so there's your medical specific. Attendant care is the one we deal with the most often. And again, the computer will try to give you the best option, but you need to know that it is attendant care and that it qualifies for the attendant care. Okay. Medical out of region is where we put our travel. So if you had travel out of region, you would be putting some information in here. Let's say I had a trip from wherever I was to Winnipeg for a chiropractor times 3 trips. Whatever I've calculated manually for that mileage to be, I don't know, but let's say it was $400 plus meals. I put some meals in, whatever calculations I'm doing there. Maybe they also had a trip to Winnipeg for the dentist. Now, I'm in Winnipeg, so this wouldn't work, but I'm going to pretend that they're living somewhere outside and they can't get local services. So they went to the dentist twice, and the travel cost of that was, let's say, $300, whatever that is. I'm going to keep track there. I can make some notes in the file if I want to make notes in the file. And then when you go to the tax return, you'll have a medical travel section as well. And again, I have to go to here to find it, but I would then have my medical travel expenses listed here. So that's where you're going to put your travel. All the calculations have to be done by hand, and you have to have documents to back it up. So I would have to have some statement from the doctor or the chiropractor and the dentist in this case saying how many trips they made in the year. I'm going to take those out. Okay. And really, really quickly as well, you might have home renovation, right? home renovation, if they're entitled to it, you're going to have some data entry for that. Oh, sorry, it has switched me over to pink, which is fine. I told you sometimes the colors get a little wonky. That's not a problem. Let's assume that we had put in a stair lift for Ruth. We're going to have the name of the company there. If they have a GST number, we're going to put what it is. And then we need to say what it's for and the date. It's got to fall within the medical last date. Let's assume they put it in September. And let's assume it was $5,000. If it was a stair lift, I'm going to say stair lift install company is their name. Okay, and then you have the choice. Is it an eligible medical expense? Because remember, not all home renovations are an eligible medical expense. Some of them are, some of them aren't. If it is, I'm going to say yes. If it's not, I'm going to say no. This one you might have to be careful. If you want to give it to a different person, you're going to give it to a different person. So if it's on Ruth's, I want the medical expense to be on Ruth's, but I want the home renovation credit to be on the people who own the home. Ruth doesn't own the home. I wouldn't be doing the data entry for her here. I would have to do it another way. So that's going to get messy, and when you get into that, I'm going to suggest you take a look at the returns. So I'm going to take it out here, and I'm going to show you how we would do it because it's not her home. I'm going to put it on Adams instead. Oh, I just deleted everything, which I did not want to do. I did tell you to be careful about that. All right, we have prescriptions, medical last date. That's correct. Okay, into Adams. He had to install a stair lift for Ruth. So if he installed a stair lift for Ruth, I'm going to say stair lift install company with their GST number 0109-2021. Stair lift for Ruth, 5,000. Eligible medical, I'm going to say no. Because if I said yes, it's going to put it on his. It's eligible for medical expense for him, which it's not. That's going to put it up here, which is the wrong line for it to be on. So what I would be doing in this case is I would say no, and then I would go into Ruth's return, and I would have to get the stair lift in as a medical expense for her. And I would put the 5,000 there. And now when I go to Adam's return, I have 5,000 stair lift install on line 33199, which is correct. And I have a home accessibility amount for him of $5,000. And if I wanted to, I could split that with Eve. I could use Optimize to split the stair lift expense. So remember, every time you have something where you have a choice, you could put it somewhere else. That's how you would do that. So that's why you really have to think about whose credit is it? What type of credit is it? I'm going to take this out because that isn't real, but I wanted you to see what that would look like. Most of the time, you're installing a stair lift for a spouse or a minor child, so this isn't usually a huge problem, but you have to be aware that it can be a thing you have to juggle a little bit to make sure the medical expense is in the right place and the credit is in the right place. And if you're in a different province, you might then have to look and see if you have a provincial credit you have to deal with as well. All right, so I'm going to take this out. And I'm going to go into Ruth's and I'm going to take hers out. And we have 5 minutes left. And I think that will give us just enough time to do the disability supports deduction. So remember, I said attendant care, we can do it as a medical expense if it is attendant care that is a medical expense, but you might have a client who does not have attendant care as a medical expense. They want a disability supports. So for this one, I hope you've all done your Barry Hockley file. I haven't done mine, so I'm going to do it really, really quickly. If you haven't done it, you can do yours really, really quickly here. We have a few minutes left. I'm going to create a new file for Barry Hockley. I'm going to enter his name. I'm going to put his SIN number in. We're going to see how fast I can do A tax return, 1998. He is single. CMA Winnipeg. I'm going to leave the phone number for now because I just want to get his return in, but I need a mailing address. I will go back and put it in if I have time. In real life, I would not skip anything, but I need to get his employment income in. He works for the city library. So 45600 in Manitoba, 229445, 720.48, box 20, box 52. To scroll down, I have a box 22 of 7,000. Double check my numbers. I'm still doing quality at source even when I'm working really, really quickly. And we have some attendant care. So I have two choices for his attendant care. I'm going to tell you that he has a disability. So we're going to add in that he has a disability. He has a certificate on file. And I'm going to leave the default. Because he has a disability and I have a receipt for attendant care, the name of the attendant is Joe Kelly, I have an option. I can enter it as a medical expense, which if I do, is going to go down here under medical specific, and I'm going to say cost of attendant care. I'm going to say $10,500. It's going to give him a $10,000 medical expense deduction or medical expense credit, and it's going to give him his disability amount. But that's not my best option. My best option is to keep the disability amount and claim all the attendant care. Because he went to work and he needs the attendant to go to work, I can do that. That's where I'm going to this second line, which is attendant. So this I would like you to do. We're going to put the name of the attendant in. We're going to put the amount of the attendant care. If he was in school, we'll talk about that when we get to students. We need the number of weeks that he was in school. I need the name of the attendant. I need his address and his postal code, because this is all going to go into the medical attendant care form. I need his SIN number. If he was reimbursed, I would be entering in that he was reimbursed. So if his employer paid for part of his attendant care or anybody else paid for part of his attendant care, I would put that in here. In this case, I'm not going to. Now I can go to his tax return, and what it's going to do is it's going to give me his income with his RPP deduction and his disability supports deduction. And when I go to disability supports deduction, there's the form. It's going to fill it in. There was no reimbursement. He's entitled to all of it. It will do all the calculations for him. If he was in school, there would be some calculations there as well, but he wasn't. He's going to get the full deduction. And even though I'm claiming $10,500 of attendant care, when I go down to this part of his tax return, you're going to see he's also getting his full disability amount. So if you recognize that he had the ability to have an attendant care disability supports deduction and you did it correctly, you would find that you got a nice big refund for him. And when I explain his refund, I'm going to say that he had a registered pension plan, he had a disability supports deduction, and he had some Canada Workers Benefit, and that's where his refund is coming from. Good. 1 minute to spare. We are officially done. I will be giving you again the answers to your Chapter 19 practice problems. However, I don't want you to do all of them, and this is going to sound a bit crazy, but we had a little bit of a mix-up this year, and they've included tax slips that I haven't taught you how to do. So the first two practice problems, 19.1 and 19.2, do as much of them as you can, but don't try to enter the slips that I haven't taught you. So the T4A OAS and the T4AP, anything like that, I haven't taught you yet. Leave those ones. I'm not going to give you the answers now. I'm going to teach you that data entry in Chapter 21. We'll do it then. Okay. You can, however, do review problems 19.3 and 19.4. So I would like you to do those ones. There are a bunch of things to check for them, and there are going to be questions. So as always, I will be taking up the questions. Even if you don't have time to do the practice problems, try and look at the tax return itself and see if you can answer the questions just from knowing your tax theory, because I do want to take those up. So this will give you a chance to practice. I'll send this out at the end of class today. And that's it. So I'm going to stop here. I will stick around if you have more questions afterwards, and I'll say have a really good weekend. Actually, no, it is Tuesday. I will say have a really good evening, and I will see you on Thursday. All right, what is Barry's refund? Good question. I will show you Barry's refund. It is $5,953.20.